welcome everyone. This is Richard Ift, and I am joined by Sherry Roulette and Annette Burris of the Federal Insurance Office here at the U.S. Treasury. Also on the line, we have Mike McCauley of ISO, who is directing the collection and aggregation of the data through the portal operated by ISO. We also have on the line Aaron Brandenburg of the NAIC, which is coordinating the effort from the standpoint of the state insurance regulators. Again, just as a reminder to everyone, the purpose of this data call, it is required by Section 111 of the 2015 TRIP Reauthorization Act, which is now Section 104H1 of TRIA. It is designed to provide Treasury with a data set that it will use to periodically analyze, among other things, the effectiveness of the program and the competitiveness of small insurers in the terrorism risk insurance marketplace. State regulators have determined to collect similar information for the regulatory purposes addressed by state regulators with respect to insurers under their supervision. Treasury and state regulators are continuing to coordinate in this effort with a consolidated approach that allows reporting insurers to provide the same data set to Treasury provided through the ISO portal, and to state regulators through a portal which is operated by New York State, and thereby satisfy their production obligations to both through the provision of the same set of data to each. The regulatory due date for the annual data call is May 15th, which was set in light of FIO's statutory obligation to provide a report to Congress concerning the program each year on June 30th. Again, because of that reporting deadline on our part, we are unable to extend the time for insurers responding to the data call beyond May 15th, so we do encourage everyone to try and get their information in by then. As has been the case in prior years, we are doing separate webinars for each of the 4 reporting templates for small insurers, non-small insurers, alien surplus lines insurers, and captive insurers. This is the webinar addressing non-small insurers. This webinar addressing non-small insurers, which for purposes of this year are all insurer groups, all insurer groups or individual companies, if you are not part of a group of companies writing TRIP eligible lines of insurance, that in calendar year 2021 had direct earned premium of $1 billion or more in TRIP eligible lines, or alternatively a policyholder surplus of $1 billion or more. Given the terms of the 2019 reauthorization of TRIA, this threshold should now continue to remain the same at $1 billion for both measures until the current expiration date of the program in 2027. Keep in mind that if you are near the break point for premium purposes and are otherwise under the threshold for surplus, that certain premium allocated to lines for state reporting purposes is not TRIP eligible. And again, that's personal lines premium that falls in some lines, particularly fire and I think allied lines, or professional liability insurance, which falls within other liability, which is a TRIP eligible line, but not for professional liability insurance, such as malpractice or E&O. So make sure to evaluate that before concluding whether you should report on the small insurer form or on the non-small insurer form, which does require the production of more information. Otherwise, we will be conducting this particular webinar based upon the requirements in the non-small insurer template. If you fall into the small insurer category, we will be holding a webinar focused on that template later this afternoon at 3 o'clock Eastern. Tomorrow, we will hold the webinars for alien surplus lines insurers at 11 o'clock Eastern and captive insurers at 3 o'clock p.m. This year, good news for all, is the collection does not contain any material changes to the data reporting templates. There have been some clarifications to the instructions, and for the cyber template, we are actually offering what I would call some liberalization in terms of how number of policies and premium by policyholder size can be reported, which I will address when we get to that worksheet. And of course, there is a new model loss question for this year, although that question is similar in format to those that have been posed in prior years. Again, remember that reporting is on a group basis, which is how TRIP operates. You only report for an individual company if you are not affiliated with another company writing TRIP-eligible lines of business. Also keep in mind that any alien surplus lines insurers that are part of a group should be reporting with that group. The only alien surplus lines insurers that should be reporting on the separate alien surplus lines template are those which are not affiliated with a non-small or small group. The process for getting started here is consistent with prior years and is pretty straightforward. You go to the website, which is tripsection111data.com, and just so everybody knows, you should be seeing my screen here at Treasury. We are currently on the annual data collection page, which is loaded up at this point with all the information for this year's data call. Clicking down at this point to the registration process, you'll see there is a link here to tripsection111data.com, which if you hit, now leaving treasury.gov. So this is, we're going to be scrolling through this for a second, but when you hit that link, okay, and here we go. This is the TRIP Section 111 data portal. When you get here, it says the registration cycle is all open. I'm not going to open this, but you'll see here there is you can download the registration form, which is here at the bottom of the page. Now I'm going to go back. Once you fill that out and send it back to ISO, you'll provide on that, your address information and point of contact. And once you get that in, you'll receive an email from ISO with a link to a secure portal that will contain your required reporting forms. Once you complete the reporting forms, you will send them back to ISO through the same secure portal. Now, keep in mind, although this is a consolidated data call, you will also separately need to submit your completed reporting form to the New York portal for state reporting purposes. And I know from prior years, there may be some different file naming conventions that ISO and state of New York require. So again, it's the same file you will send to each, and obviously you'll need to, satisfy the naming conventions that are required by each of the portals. The forms will be provided to you in Excel format. However, if you prefer to report using a CSV form of report, you can elect for that, and ISO will provide you with the specifications that allow you to report in that format instead. And before we get sort of going further, I'm going to turn it over to both Mike McCauley and Aaron Brandenburg to have them summarize just sort of where things stand on their standpoint on the reporting. Mike, could you just speak a few words on where things are at this point?
Yeah, thanks, Richard. Just a quick update for all non-small insurers who have registered before end of business yesterday. All those registrations have been processed, and you should have received your email communication in order to access the data templates. If you have not, you can let me know, or if you've had any technical difficulties either accessing the secure message containing those credentials or the SFTP site directly. I will include contact information in the chat section should you have any questions regarding either of those. And that's a quick update I have, Richard. Thank you.
Okay. Aaron, anything new, different from standpoint of the state regulators?
Sure. Thanks, Richard. No, not really. And I think you explained it well. This is a joint data call. So when companies have their data set ready, in addition to transmitting it to Treasury, they're asked to transmit it through the New York portal. We sent letters out to insurance companies with some of that information. In addition, on the NAIC website, there's a terrorism risk insurance data call page that has linked to the portal instructions and additional information. But yeah, we would just ask that you send the data to both places. And if there is a refiling, please communicate with both entities and make sure that both entities receive that refiling. And we do have some, like I said, some additional information on that website. We have a triahelp@neic.org email address that if you need help or have additional questions, feel free to reach out to. That's about it.
Okay, thank you, Aaron. Okay, moving on.
Richard,
again,
before you go on,
Yep.
there's some difficulty on the on your guys' end. If anybody has any questions, I'm unable to see the host question. So if anybody has any questions, they can either send it to everyone or put it to me, because I don't know if you're going to be able to monitor that while you're presenting.
Well, here's we're having folks, we're having a few technical difficulties on, so it's surprisingly enough, I seem to be the only one not having any technical difficulties. So what I would suggest at this point, and we'll get to that, if you do have some questions as we go through, and I see there's one question so far where the recordings will be made available. Basically, once we're done with all these and we get them formatted and edited to take out the stuff at the beginning, which is unnecessary, we will basically get them posted in the same place where you see the links, sort of moving down the page here. The training webinars, instead of links to the webinars, there'll basically be links to the recordings there. So that'll be available possibly next week. It takes a little bit of time to get them up and load them up, but certainly within a week or two after the webinars, those will be available. For other questions as we go along, I may not be able to, obviously, if you don't want to raise a question that you send to everybody, that's fine. If you send a question, well, I was going to suggest you send questions to Sherry Roulette. I'm not sure. Well, why don't you try to send any questions directed to both Sherry Roulette and Richard Ift if you want them just to be sort of anonymous. Otherwise, if you send out one to everybody, everybody knows your question. We know sometimes people don't like to do that. And in any event, so send the questions there. And I'm guessing if Sherry's able to access them, she may interrupt me and we'll try to do them in real time. Otherwise, we'll just sort of do them all at the end once I have a chance. It's sort of hard for me to sort of run through these and do the presentation. So anyway, that's going to be the as questions come up. Moving on, as was the case last year, if you write in the workers' compensation line, NCCI, the California WCIRB, and the New York Compensation Insurance Rating Board will report in the workers' compensation fields for those companies that report workers' compensation data to state regulators, which then gets merged into the data otherwise being reported. NCCI otherwise coordinates with the rating bureaus in the states in which they do not operate, other than New York and California, which we get separately. So we will be getting comprehensive nationwide information. Keep in mind, though, this does not let workers' comp, monoline workers' comp carriers not register and report. There's exceptions here. NCCI and the rating bureaus do not register for you, and we need that to happen, nor will they complete the questions concerning reinsurance information relating to workers' compensation exposures, which still need to be completed by the insurer. Other than that, you are not required to report the other fields, which they will put in for you based upon information that we identify to them. In addition, because insurers will still need to provide data for excess workers' compensation policies, because NCCI and the rating bureaus do not have that information either, and thus cannot provide it to us. So again, even though you're workers' comp only carrier, you do need to go through the registration process and at least get the forms and report in that relatively limited amount of information to address, well, excess workers' comp as well as the reinsurance information.
So Richard,
Yep.
I am in the meeting now. Let me know
Okay.
if you would like me to turn the pages for you.
Well, we're on my, I think I've got it on my screen. So let's see if let's see if it works with me sharing, and if it turns out it doesn't, we may shift over to you. So
Okay, sounds good.
okay, so let's see. Main suggestion is to, and let's go, actually go up. Okay, here on the thing, the website, we have the non-small insurers form and the instructions. You'll see I'm clicking through to the instructions here. Hopefully are loading up now. This is the instruction document. Our main suggestion is please review the instructions document, which is on the TRIP website, and I believe ISO can get it to you as well for the non-small insurer form you will be completing. It may answer many of the questions you might have. It has sort of general guidelines questions. It identifies changes year over year, which could be helpful if you've been doing this for a number of years at this point. So certainly do not neglect to take a look at that, and that should answer hopefully many of the questions you might have. Otherwise, in terms of other sources of information apart from this webinar, you can obtain help in response to a specific question you might have by emailing trip111data@iso.com. If you send such an email, you will either, 1, get a written email response, 2, get a call from ISO, or 3, get a call from someone at Treasury. Alternatively, you can also contact Mike McCauley, Sherry Roulette, Annette Burris, or myself. And Sherry, I would ask you if you could put those contact information details in a chat
Sure.
message to
Absolutely.
everyone, that they can get that, and so just in case they need to contact somebody. In addition, we have also generated a sample answer document. I'm not going to click into it, but it's here, PDF document that you can access, and it sort of goes through at least what we consider some of the maybe less intuitive issues with regard to the reporting that hopefully will be helpful. And also on here at this link is a comprehensive zip code listing for the various areas identified on the geographical exposures worksheet, which when we get to it, it's basically the areas that AM Best identifies for their annual terrorism questionnaire, but some of those are identified by them as like whole counties, and this listing actually gives you for each area, each zip code within each of those areas. So hopefully that could be helpful for some of you that pull the information in that fashion. Okay, we're now going to walk together each individual worksheet within the non-small insurer template, which we will now here is, with some explanations as to what we are seeking and suggestions for completing each worksheet. We will then open it up to individual questions, which, as I indicated before, you can pose by going to the Zoom menu. You send it to Sherry. I would send it to Sherry and myself. We'll obviously see who's asking, but if otherwise, if you send it to everyone, everyone sees it. So if you want to remain anonymous, with your questions, you can do it that way. You can do this throughout the webinar. Again, we'll try to address any as we go along, but if not, we'll sort of do them all at the end as necessary. We are going to be walking through, these are PDF versions of the forms as they appear on our website. It's a little easier to actually present in that format. Once you register, you will be getting or have already received live Excel versions of these sheets, which ISO tailors as necessary for each individual group based upon the form it should complete, the jurisdictional worksheets it needs, etc. Again, you can also report by providing information in a CSV file format, and ISO will provide those specifications upon request. This first worksheet, the insurer group affiliations, it's just the basic information. It identifies who you are. Again, reporting is on a group basis, unless obviously you're a single company. We use NAIC group and company codes for tracking purposes. If you are an insurer that does not have such a number for whatever reason, ISO will assign a number to you for tracking purposes. If you have reported before, please use the same numbers for company and group identification that you have used in prior years. An individual company in the group that is an alien surplus lines insurer should use the number assigned to it by the International Insurers Department of the NAIC. Regarding this field 2021 policyholder surplus, you will need to identify that for 2021, not 2022, which is the focus of the data call for the most part, for the relevant entities based upon how you already report that for state statutory reporting purposes. Regarding the 2021 TRIP eligible lines premium, again, that's relevant to us as the measure of your deductible under TRIP for purposes of calendar year 2022. You need to rely upon that number when you respond to some of the questions on the reinsurance worksheet. If you reported a figure last year that you now believe to be an error based upon further evaluation, then please enter that revised number this year. While none of you in this group are likely in this situation, we've added some clarifications in the instructions this year for insurers that did not have any TRIP eligible lines premium in 2021 and thus might be tempted to enter 0 in this field. In that situation, the program provides for assessment of a deductible based upon TRIP eligible lines premium in the year in question, which is 2022 this year. So if you are in that category, which again I suspect isn't the case, wouldn't be the case with a non-small insurer, the instructions specify what you need to do here. So trust me, your number for that number should not be 0 under any reason. Moving on to the next worksheet, which is the policies and direct earned premium by jurisdiction. This is arranged by relevant NAIC line of insurance or subline, so that's in column C. The figures in columns E, F, and G should add up to D, and in fact, the formula should auto-populate D with what you enter in, the sum of what you enter in columns E, F, and G. Column H is a figure for the actual terrorism risk premium charge and should thus be a subset of the total DEP reported in column G. Remember, when reporting premium, remember also that although the terrorism risk insurance program is defined for the most part in terms of NAIC state reporting lines, there are some significant differences, principally lines 1 and 2.1, fire and allied lines, when in here, include both commercial and personal lines coverage, and TRIP only addresses commercial coverage. So any personal lines coverage needs to be excluded from what you report. Also, professional liability or E&O coverage is excluded from TRIP, even though it otherwise falls within other liability. This is line 17 for NAIC reporting purposes. And other liability is generally a TRIP covered line. The instructions also identify the principal differences between TRIP lines and the NAIC state reporting lines. Again, remember that if you write workers' compensation insurance, line 17 here, you don't need to fill those in because those will be reported for you by NCCI, California WCIRB, and the New York Bureau. You don't need to fill in those. However, in 16 workers' comp, line 17.3, excess workers' comp, you do need to fill that in. So please keep that in mind and do not leave that blank, assuming that will be reported for you by someone else. Moving on, premium should be entered on a direct earned basis for calendar year 2022. That is the basis upon which TRIP is set up, not direct written premium. Of course, this means that if you have a policy that started before 2022 or ended after 2022, you will need to include only the premium earned in 2022 for that policy. If you have a policy that covers multiple states, the premium should be allocated to each state proportionally in the same manner as you would report it for statutory reporting purposes to state regulators. There are some differences in the way policy count gets entered, which we do to try to avoid double counting as much as possible. Policy count should be based on policies issued in 2022 and or still in effect on December 31, 2022. So a policy in effect from January 1 to 12/31, 2022 counts as one. From 6/1/2021 to 5/31, 2022, you would count that as zero. You should have obviously entered it last year, but for this year, that would be entered as a zero. For policy count information, you would still be entering the earned premium associated with that in the premium portions of the line. And from another example, if you had a policy in place from 7/1/2022 to 6/30/2023, you would count that as one because it would have been in effect on 12/31. Furthermore, a policy in effect for a multiple year period, so 2-3 years, again, if it's in effect on 12/31/2022, you should count it as one. Policy count should be done by line in columns I through K on this end of the sheet. So if you have we realize that you will be double counting policies here for policies that cover multiple lines. So if you have a policy that provides fire and allied lines coverage, you will enter a policy count of one in each of those lines. So there'd be a one, well, depending upon which one it falls into, one in this line as well as one in the second line. On line 21, however, down here, that's where we want you to provide essentially just the total number of policies issued. So that policy covering fire and allied lines that you entered is essentially two ticks, one in one line and one in the other line. In line 21, which is a sort of combination of all lines, please just enter one for it in that field. So we'll be able to judge what's going on in terms of the number of policies that are covering multiple lines. Also, we appreciate there will be double counting across states if you have policies that cover multiple states. In addition, in each policy covering multiple states will get entered into each relevant state worksheet. And that's all I had in connection with the premium sheet. Moving down to the next one. This is the standalone terrorism nationwide worksheet. Again, for comparative purposes, you will see in here we do ask for coverage written for both certified acts of terrorism under TRIP, as well as terrorism coverage that you might issue for non-certified acts of terrorism. Again, that's for comparative purposes, and that would be essentially policies outside the scope of recovering under the program. Otherwise, this is a pretty straightforward worksheet, and again, it's on a nationwide basis, so you don't need to try to allocate this by, well, you don't need to allocate here by multiple states. Premium on here is otherwise TRIP eligible premium, so it should also be reported on the prior worksheet, the prior premium worksheet in the fields it goes in. But other than that, this one is a nationwide worksheet. Okay, the next sheet is the cyber worksheet. And you'll all recall, if you did this last year, there were a number of expanded areas of inquiry introduced for the first time in the 2022 data call. None of these categories have changed for this year, except, as I noted at the outside, we have liberalized certain reporting requirements. As in prior years, we have this set up for both standalone cyber policies, which is column C, as well as cyber coverage provided as part of a package policy, which is column D. This is essentially NAIC cyber data calls utilize the same distinction, and we're basically seeking for you to utilize that same division here. You should not provide any information on this worksheet on so-called non-affirmative or silent cyber coverage to the extent you believe, if you still believe that you haven't excluded such coverage out of your policies generally with respect to cyber, where, I mean, the idea with the policy does not affirmatively provide cyber, but because it does not affirmatively exclude it, it might still provide coverage. We are only looking here for affirmative cyber coverage reporting. Lines 3 through 6, 8 through 9, and 18 through 19 request information concerning premium, number of policies, and limits for cyber policies and the TRIP eligible lines of insurance. We have been requesting this information since I think about 2017 or 18, I think. And again, nothing has changed with we're asking you essentially report this in the same way you've reported in prior years. Line 7, 10, and 20, you'll see request information on premium, number of policies, and limits, but as applied to cyber policies written in non-TRIP eligible lines of insurance. While the information is the same as the support sort of information we have requested in the past, we expanded it last year to include policies written in non-TRIP eligible lines, so we can assess the amount of cyber insurance that is currently not subject to the program. Our understanding is that this will largely, perhaps not entirely, be cyber insurance that is currently coded, characterized, and otherwise reported for state purposes as professional liability insurance, which is subject to an exclusion under TRIA, as we noted before. These questions, assuming you write policies in this fashion, should be answered in the same way as you have already been responding to the questions for policies written in the TRIP eligible lines. Last year, for the first time, we also began requesting certain categories of information not previously requested concerning, and okay, starting here, lines 12 through 17, basically information on both number of policies and premium as allocated by the size of policyholder, small, medium, and large, and measured for last year's data call only by number of employees. Then moving on, lines 21, and I need to scroll down here a little bit, lines 21 through 24 limits specific to cyber extortion and ransom payments. And finally, lines 25 to 30, law-specific information to cyber extortion and ransom payments. If you participated in the 2022 data call, you may recall that we provided certain special instructions concerning these new categories, which in some cases reflected that we would be taking a liberal approach on the collection for those insurers who may not have previously collected certain of these elements. Obviously, we did hear from a number of folks that they did not have a way, particularly with respect to size of policy as measured by number of employees, that some companies said they just didn't collect that and hence weren't really in a position to report that. Given that we're now in the second year of this collection, that special instruction has been deleted, and we do expect every company to make their best effort and, you know, a true and correct response for these categories, which is sort of the test that is in the certification that you sign when you submit this. Having said that, for one of these categories, the premium and number of policies allocated by policyholder size, we have provided some further options for reporting. Last year, the reporting required the allocation to be made based upon the number of employees of the policyholder in certain identified ranges for small, medium, and large. This year, based upon some comments we received, we are also allowing insurers to use revenue categories. And let's see, these are specified. Let me move back up. These are specified in the fields this year. So as you see now, a small insurer is an insurer with under 100 or fewer employees, or less than 10 million in revenue, medium 101 to 500 employees, or 10 to 100 million in revenue, or large policyholders, more than 501 employees or more than 100 million in revenue. So we do hope that you know, this will, if you couldn't do it one way, you would hope you could certainly do it with the revenue categories. If you couldn't do it with the number of policy categories, so hopefully that will make this easier for everybody involved this year. Please note, this is an either-or election you must make. We don't want companies to be basically, you know, responding for some policyholders based on number of employees, and for other policyholders based upon revenue categories. Otherwise, that doesn't. We're going to be tracking that, and we want to make sure that the numbers are coming up in a sort of an appropriate fashion at this point. And Mike, can I call on you again? Can you address briefly just how we will be tracking that, because that's going to be part of the form submission process?
Yeah, sure. So for all those that have registered and received a response to your registration, within the body of the email, as well as the SFTP instructions that were attached to that, we are identifying the manner in which you are reporting, whether that be by the number of employees or by revenue, based on the file name convention. So basically, you're going to have your TRIA numerical value for your SFTP account. It's going to be a cyber.z. Your Z is going to be replaced by either an E, representing that you are reporting based on the number of employees, or R, based on the revenue values. I can put that into the chat as well, but for everybody that has registered, you would have seen that within the context of the email response, as well as the FTP instructions.
Okay, thank you, Mike. All right, we've in terms of, I won't call them changes, but clarifications. We have also added certain clarifications in the instructions on cyber, which specify, and I'm not going to pull it up now, just in terms of the loading issues, but you know, we've tried to clarify in the instructions which fields should reconcile to other fields. I mean, we think last year most insurers sort of got this correctly, but just to make sure there was no misunderstanding as to what we were looking for, we have provided some further specification there. And just as an example, I'll direct you to the instructions for lines C12 through E12, basically tell you what fields should add up to other fields within the report. So hopefully that will be helpful to you as you respond this year. There are no changes to the questions concerning limits specific to cyber extortion and ransom payments. As explained last year, the distinction we are drawing is between coverage for cyber extortion generally, which we understand can contain many policy benefits apart from payment or reimbursement of an actual ransom payment, versus the limits available for the actual ransom payment. To the extent there is no distinction here, i.e. the same general limit applies to both, then just report the same limit. What we are trying to get at is if there is a different limit for cyber extortion generally versus the actual, what might be available for the actual ransom payment. And again, the information on this is being requested separately as between policies in the TRIP versus non-TRIP eligible lines. Finally, the last category, loss information specific to cyber extortion and ransom payments, is requested for all cyber policies combined, whether in TRIP eligible policies, TRIP eligible lines or not. The questions seek paid and incurred amounts for cyber extortion generally, and paid amounts for ransom payments, along with the number of claims such ransom payments are associated with. Finally, direct defense amounts for cyber extortion generally, without any effort to segregate that to ransom payments specifically, are sought and on a paid and incurred basis. We can respond to further questions at the end of the prepared remarks on this, and also take specific questions on a direct basis if you would like to contact us separately. So moving down through the form, next sheet, I'm going to have to minimize a little bit. Okay, this is the exposure basis by jurisdiction. This also relies on the NAIC reporting lines or sublines. And we're asking you here to identify the exposures both covered by and not covered by TRIP. The point, because terrorism risk insurance was not obtained. The point is to calculate the actual total potential exposure under the policy in both cases. The idea is what is the most you might have to pay under the policy in question. This worksheet also requests for the property and liability exposures, the specific identification of terrorism policy limits where NBCR risks are not excluded entirely. Thus, in column D, for the property, you are requested to identify the property limits of terrorism risk insurance, while in column E, in here, you are requested to those same limits where NBCR coverage is not entirely excluded. So obviously, column E should presumably be a subset of the figure identified in column D, or at least no more than the figure in column D. The same questions are found in columns I and J. Oh, sorry, wrong ones. I and J for liability policies. Report that limits are available if the policy provides terrorism risk coverage for any NBCR exposures, even if some exposures, for example, nuclear, are excluded so long as others. So, for example, if the policy covers chemical or radiological exposures, but not nuclear exposures, you would reflect that limits are provided in that situation. If the only NBCR coverage provided is on account of the application of so-called fire fouling laws, which are in force in certain states, please just report no coverage is provided. We're obviously aware of fire fouling laws, but we don't need you. We're looking for you to respond based upon the terms and conditions of your policies, as opposed to legal requirements otherwise. We also request on this worksheet information on policyholder deductibles or self-insured retentions. Where is that? Yep, column F here, which should report, but we're asking you to report this only in connection with primary level policies that request such a deductible or SIR obligation. Please don't report such obligations in connection with high-level excess policies, or we'll get a lot of double counting by virtue, because presumably that will be reported by the same, basically multiple carriers in the same tower. For policies which contain multiple deductibles or SIRs by jurisdiction, depending upon the property, location, or operation, please use the lowest deductible or SIR by state. Similarly, for the U.S. as a whole, and there is a U.S. as a whole worksheet here, please use the lowest policy deductible or SIR. There are some differences in this one in the way exposure is information. Information is calculated as compared to premium and policy count. The exposure metrics should be reported on a jurisdiction by jurisdiction basis and enter the relevant limits for each jurisdiction, even if an aggregate limit might cap your exposure across multiple jurisdictions. So for example, if you had a $1 million policy covering risks in California and Oregon, you would report 1 million of exposure on both the California and Oregon worksheets, even though there may be an overall limit of 1 million. On the U.S. worksheet, provide total figures for the United States that are not multiplied by the issue of limits applying in multiple jurisdictions. That is, apply here any aggregate limits that might apply, and otherwise respond on a single occurrence limits basis, assuming no aggregates apply. In the example I previously provided, you report 1 million as the overall U.S. exposure. For purposes of this worksheet, apply the exposure figures as they existed for policies in force on December 31, 2022. So this is a little different from policy count, which would also include policies issued in 2021 but expiring before, issued in 2022 but expiring before December 31, 2022. If a policy ends before December 31, 2022, for the exposure worksheet, you'll be entering a 0 for that policy. In addition, once again, the rating bureaus will provide the payroll information for the workers' compensation line. However, payroll information applicable to excess workers' compensation will need to be supplied by the reporting group or company. Okay, moving on to the next worksheet is policyholder industry code nationwide. Here, we are looking for you to classify your property, property and liability premium by your choice of NAICS, SIC, or other, and that includes ISO class codes to divide it up on that basis. Note, the NCCI and the rating bureaus will complete those fields based upon using the NCCI coding system, so you don't need to worry about those. We do understand that there can be hundreds of codes within general categories, but we do ask that you provide the specific code where available. And ISO will aggregate this information into the more general categories needed for our analysis. Note that there is, down here at the bottom, well, with each group, and again, you only choose one of these and fill it out for one area, so either NAICS or SIC or other. Each of these does have a uncoded not available. That's not put in there to just let everybody report everything in this field, but we do appreciate that there may be some information that cannot be reasonably captured on this level of detail. So in any event, that is there. We are in recent years, there's actually been very little amount of information reported in that field, so it does seem most people are able to do that reporting at this point. Again, if you are going to use an other category here, you do need to coordinate that with ISO in terms of what you're going to be using so that they're in a position to reconcile everything in terms of what ends up going to Treasury. The next worksheet is places of worship. It's similar to the policy industry code worksheet that we just discussed in terms of the same premium elements that it seeks. Like that worksheet, it's on a nationwide basis and seeks information in the general categories of property, liability, and workers' compensation. However, on this worksheet, we are only seeking information on policies written for places of worship. When you are reporting this data, please do your best to only report on coverage related to actual houses of worship while excluding any affiliated religious organizations such as hospitals or schools. You will see that we've asked you to report this under specified codes, which we have identified as being the ones most logically limited to that category, i.e. the actual places of worship itself. So that's what we're looking for here. This is a requirement that Congress put in a recent reauthorization of TRIA. So again, places of worship, but not other religious affiliated outfits. If you can't report on these metrics and can do another version, so for example, just do a name search on your policy listings to identify, who falls into these categories, you can do that and report that in the other category. We don't have an unavailable category here. This is a direct ask from Congress, so we do expect everybody to do their best on identifying, what places of worship they are insuring and to provide the appropriate requested information within their selected category. Again, for the workers' compensation elements, NCCI, California WCIRB, and the New York Bureau can provide this information as well, so you don't need to complete the fields here at the end. Next is on the geographic exposures worksheet. Again, think of this as requesting the same sort of information that is requested by AM Best on its terrorism questionnaire. That's what we relied upon to generate this. The geographic descriptions are the same as used by AM Best. Again, as I mentioned at the outset, to aid in the reporting, we have also generated a complete code list of zip codes for each of the jurisdictions located on the worksheet. So if it's easier to use that to respond, you can do that. So just, for example, as you see, for example, Tampa, St. Pete, the description by AM Best is all zip codes in the 2 counties of Hillsborough, and I think that's Pinellas. If you the worksheet, which is on the web page, which I highlighted earlier, actually has each of those zip codes. So that doesn't make you hunt and search for those zip codes. So you've got those there if you want to use that. And that's in Excel spreadsheet format on our website, so that will allow you to manipulate it easily. Otherwise, use your best approximation of these areas. But again, similar to what you would have done for what you report for AM Best evaluation purposes. Again, workers' compensation fields here, and that's where is that? Payroll here, column D. That will be filled in for you by NCCI, California WCRB, and New York Bureau, but not for column E, which is the excess workers' compensation field. Again, there is an unavailable field here as well. So if you simply can't figure out where a particular exposure is based, that it can go there, and at least we'll see how much we can at least look at that to see how good our sample source is. questions on page 10, or well, actually it's probably 11, actually page, yeah, 10 below. It's page 11 now, sorry. Seek aggregations by zip code. So it's all exposures within a particular zip code, and then please rank order those as requested. The questions in lines 49 and 50 down here, by contrast, do focus on a particular location as distinguished from all locations within a particular zip code. Last but not least is reinsurance, again, a nationwide worksheet. Answer the questions here for your private third-party reinsurance protection. Do not include any intracompany arrangements you may have in place. We're not interested, even though they may be relevant for certain state purposes. They're not relevant for trip purposes, so please don't report those. You need to answer the workers' compensation questions here, since rating bureaus do not have any sense of what your reinsurance arrangements are. We asked for Nat Cat. There are some questions on here for natural catastrophe reinsurance, which again, we are doing for comparative purposes as against terrorism risk reinsurance to see how the market is working in that regard. Note that the line 26 question, any other reinsurance questions specifically applicable to TRIP certified acts of terrorism, that's apart from the domestic foreign exclusion questions. This is meant to capture situations if you have exclusions of risks at particular locations, or perhaps within certain metropolitan areas. We strongly recommend that if you have an individual responsible for reinsurance in your company, that you forward this worksheet to them for completion, as this will help ensure the accuracy of the data we receive. Now, when responding to this worksheet, we do need for you to enter in the response column C, an actual number. So for example, when you're asking for a limit, we've gotten, and this happens every year, and we need it for it not to happen, see attached spreadsheet, or see, information in the comments field. We need for you to put in column C your best estimate based upon the instructions of what your limit, your retention, what have you, is for your reinsurance. Obviously, we understand that in a complex reinsurance program, it might be difficult to do that, and there will be variables depending upon what the particular situations there is. But bottom line is, we do need you to report a number in C. If you have any questions about what number you think you should report, please reach out to either ISO or the Treasury, and we'll give you whatever guidance we can give you. Moving on to the next page. This is the model loss question, which we do this every year we do this every year. The questions are the same. The scenario obviously changes from year to year, so we don't basically get the same information year over year. Basically, what we're asking you to do is figure out the total projected loss under your policies, if any, on line 30 associated with the event in question, and that gets divided up between the categories 31 through 36. So while it's sort of the starting point, basically, I think the way we have this set up is the way the formulas work is whatever you enter in lines 31 to 36 the formula will sum into what is in line 30. So the idea is for policies that respond to this event in some fashion, you should basically enter in lines 30 to 36 how it will respond, either in terms of what your policyholders will pay, that's line 31, what your deductible under TRIP is, and that's obviously a number, and that gets divided between what you will be holding net versus what you have arranged reinsurance protection for. Line 34, that's the amount that would be paid by the government in the event of a loss. And finally, the balance, and that's an 80% figure of the amount above your deductible. The 20% balance figure, that's in your so-called copay share, which goes to both you, net, if you don't have reinsurance, although if you do have reinsurance, you would enter that figure in line 36. So, the total, if you're using a modeling program to try to figure this out, we really need you to put in these total figures based upon just the policies impacted. We don't want you entering in, the loss figures for essentially what emerged for the event as a whole without reference to your particular affected policies. It's basically policies that might be within a claim under TRIP. So for example, do not provide any information about estimated losses your policyholder might be required to assume if it did not take up terrorism risk insurance. The total loss, as I said, the total loss figure will equal the sum of these various elements. This year's scenario focuses on a location in Las Vegas, Nevada. It involves a single truck bomb blast at a single street location, and the specifications here provide specific GPS locations for that scenario description. It should be considered to be a single event or occurrence for TRIP purposes, meaning that you should only assume the payment of an individual TRIP deductible and should otherwise apply your policies as if they are responding on a single event or occurrence basis. So only respond if you determine that one or more of your policyholders would be exposed to a loss arising from the scenario under a policy providing coverage for terrorism risk. So obviously, if you don't write any policies in Nevada, you will not be providing any information in connection with this. And again, first step, provide, actually walk through what you will do on this. And again, it's what comes in under your policies and then divide it up in these various categories. Again, for the policyholder retention or deductible, same thing as with the other information on the exposure page. Only enter something for that for your policyholder if you're essentially directly excess of that, or if it's a primary policy. If you're or a first level policy, please don't enter that information, if you're at the top of the tower and you conclude you'll be affected by this event, because otherwise we will theoretically be getting a lot of double counting. This scenario does provide some information concerning estimated employee injuries, so you can use that in connection with your calculations, but it does not require you to estimate any potential liability exposure. So again, you're only modeling property insurance and workers' compensation payments, obviously given the variables of who might have liability for an event. That's not something we're trying to model here. Again, the federal share percentage, once you go through these categories, it's going to remain at this point for some time. Once you've basically factored in your deductible, and again, that's the reason for the questions on what your deductible figures are for calendar year 2022, which is essentially 20% of your premium for 2021. The amount in excess of that, 80% of that, is the amount of your claim against the government. That's the line 34, and lines 35 and 36 remain within your exposure, although we're asking you to divide it between net and figures subject to reinsurance. That's all I have in terms of the walking through the worksheets. I'm actually not seeing anything in the chat at this point as to questions anybody has. We'll stay on here for a minute if anyone wants to type in a question, or for that matter, I guess if you want to unmute yourselves, or we can unmute you if you want to just state it. I mean, we can stay on for a few minutes here. Well, I'm not seeing any questions here. So, Mike, anything else from your standpoint, or Aaron, if Aaron's still on?
Nothing. Oh,
I'm
nothing additional from my end, Richard. You have everything covered.
Okay.